Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. A very exciting Thursday morning in the Bitcoin mining space. We just received a press release from Riot talking about some changes to the board of directors, welcoming the former CEO of Hut 8, Jamie Leverton, to the team. In addition to that, they provided an update on their formal HPC AI progress or strategy. So we're going to be talking about that in addition to IREN earnings that came out last night. Now, Anthony has put together some great comparative tables looking at IREN's earnings compared to CleanSpark and Hive. Very interesting, as IREN and CleanSpark are really the two giants in the sector right now, one with a HODL strategy, one without. So we're going to be talking about that in today's video, along with our regular market and Bitcoin updates. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. Let us know in the comments section below what you thought of IREN's earnings last night, their earnings call. We, of course, have our interview with Daniel Roberts coming up in just a few hours' time. We'd love to hear your thoughts going into that discussion and your outlook for the remainder of 2025 in terms of the Bitcoin mining space. Now, with that being said, let's get into today's video. Okay, guys, that's right. Thursday morning, we've got our big interview with Dan Roberts coming up to talk IREN earnings in just a few hours' time. But as normal, Anthony, a few big press releases out this morning that we wanted to talk about and some general news and housekeeping for the channel. So first and foremost, tomorrow is the Dr. Lewis Memorial Spaces. We've actually managed to have our web team put up some great images, video graphics on our website. We would encourage you guys to both take a look at that and attend tomorrow's Spaces session with Anthony and myself. A great opportunity to remember someone who contributed a lot to the space and obviously so many other components of his life, Anthony.
Yeah, absolutely. I'm still, we're still in shock from the news. I mean, he's one of the group. He's in the mining mafia. We had him on the show a number of times as a guest speaker. And we had him on the live shows. We didn't do many live shows, probably maybe a dozen live shows, but he did a few of those and was very well received. A veteran like myself. And, when you're 49 years old, it just makes you think. I mean, he was tweeting the day before and putting stuff out. He's in the Analyst section of the minor competition. He was putting out tweets about the competition when he was doing well. And, he was at the top of the board at one particular period. I think he was in the first competition, at the top of the board. And so, he had a good run at, in some of the weeks there. But, it's Spaces tomorrow with the mining mafia. I think Bitcoin mining guy will be leading that Spaces there, so hopefully get on and have a chat and talk through some of the times. I mean, we're due to meet up with him at Mining Disrupt this year, so that would be our first time actually physically meeting him. But we've been in the space with him for the last 12 months, and he runs his Alpha Insights with Adrian. Obviously, we do our side more on the YouTube side, but always had great guests on there. Very well received. I mean, I've seen the comments from the likes of Matt from CleanSpark and from TeraWulf as well. They were very appreciative of the work he did in the space, and he did a lot of content. I mean, I don't put out anywhere near as many tweets as some of these other guys, but DR was putting lots of content out there on a daily basis and letting everyone know what was going on. And it's just a shock. I was so looking forward to catching up with him because I've met quite a few of the people on the Analyst board. We managed to catch up in Nashville last year, so I was really looking forward to meeting DR. He was going to be a speaker like ourselves at Mining Disrupt, and unfortunately that's not to be. But tomorrow we'll have some time to think about DR, and as I say, on the website at the moment now we've put some videos and pictures just to celebrate his life and what a good all-round guy he was. Lawyer, Obviously, he had a great family. His son was, he was always going on about his children. His son was a state athlete and really, good in his college work as well. So he wasn't just, athletic, he was all round. And obviously a chip off the old block with DR. I mean, DR was a soldier, or I think he was in the Marines, and he became a lawyer when he finished his time there, and had a few other businesses, but always had a lot of time for X and for the mining space. Did a lot for the mining mafia as well. Supported Bitcoin mining guy. Came on our channel a few times there. We loved having him on as a guest. And it's going to be a shame we're not going to meet up with him in March. Hopefully, we'll meet up with some people then. We can have a chat about his time over the last few years, when we get to Miami and Fort Lauderdale in March.
Yeah, most definitely. Now, the Eagles put up a win for DR. He was a big Eagles fan. It would be great to see him come out on top of the Minor Madness Q1 competition. Would sure be special. Now, you talk about coming up trip to Florida. Obviously, we were expecting to meet some of the local community there. We've also got a trip to New York, Anthony, for Bitcoin Investor Week. So this is put on by Anthony Pompliano. He's also tied in with Hut 8, so that'll be great to see some of them. A number of the miners represented at the conference, but it's also a big week for earnings. So we're actually going to be meeting up with some of the CEOs out there in New York. We're going to continue our regular podcast, doing our earnings calls, but a lot going on in the space in the coming few weeks.
Yeah, absolutely. And, the likes of Fred Thiel, CEO of Marathon Digital Holdings, he's out in New York. Jason Les is also there. Tyler Page from Cypher Mining, he's there as well. So there's a number of CEOs out there, and those three actually have got their earnings coming out that same week. So that's going to be a fun packed week. As I say, we've had three earnings out already in the sort of like the first week of earnings season. And, that particular week we're in New York, there's going to be three earnings there. So we'll be quite busy in the hotel room putting together information so we can get the information out to you guys, because I know that you like to see the data, you like to see the comparison. So we'll be getting all that information ready in New York, and probably doing a couple of podcasts while we're there just to make sure you get it in a timely way. So yeah, looking forward to that trip.
There you go. We can't even take a vacation anymore, Anthony, without podcasting. We'll try and put together some pictures and videos of the trip too. We're going to have some fun while we're there, in addition to working. Now, talking about market sentiment here this morning, Bitcoin has pulled back a little bit, sub $96,000. However, many of the miners, including Riot, actually having a very strong day. We're going to talk about the Riot news in a second here, but nice to see some life in the miners despite maybe a little bit of weakness in Bitcoin there.
Yeah, there's Right's having a good day. I'm not 100% sure, what's driving that. Not seen any other news other than the fact that they've announced something. We'll come on to that in a second. And maybe the caliber of the people that will be in that announcement, maybe that's added value to Riot. We do know one of them for certain. So they've had a good start today, nearly 7% up. Probably, 2/3 of the miners are in the green and a third in the red at the moment. So not a busy day. So in terms of volume, Riot's already over 21 million shares in the first couple of hours of trading. Marathon over 17 million. Bitfarms 18 million shares. CleanSpark at 10 million shares. And Iron at 10 million shares as well. Iron started the day in the red, and it's sort of pulled back a little bit. It's still in the red at the moment, a couple of percent down. But we'll come on to their results, and to be honest, I'm scratching my head as to why it's in the red, because I actually thought they were very, very good results yesterday.
Most definitely. And I actually, this is my extent of my technical analysis, Anthony. I drew a little support line on this graph. This is a 6-month view of the Bitcoin price. Again, kind of hovering in that low 90s to mid 90s range. I went for a great lunch discussion yesterday with another investor in the Bitcoin space, a large shareholder of CleanSpark. He was walking me through some covered call strategies, which was very interesting. We might actually put an educational video out on that one, Anthony. But in terms of the miners themselves, his understanding was a lot of these big firms are short miners, long Bitcoin via the ETFs. And that's where we're actually seeing a lot of this short selling pressure. So we've talked about this in the past. days like today when Iron comes out with very strong numbers, very bullish press release, yet the shares trade down the very next day. It appears this is some manipulation going on. Large institutions are shorting the miner, then maybe buying some out of the money call options to protect them on the upside there. So very interesting developments, but as you say, a bit of a head scratcher as we look at those numbers and the reaction of the share price today. The final piece of news before we jump into Riot, Anthony, I just wanted to provide an update on the strategic Bitcoin reserve. It seems like Bitcoin has really traded up in levels this year. The ETFs brought us from the 30s to the 60s. Trump's inauguration election really brought us from the 60s, 70s to the 100 or the 90 range here. We feel the next leg up is going to be led by government buying, by strategic Bitcoin adoption. We're now seeing this at a state level. 29 states have implemented some sort of strategic Bitcoin reserve policy. So the question at this point, do we even need a US federal strategic Bitcoin reserve when we're seeing this level of adoption at a state level?
Well, those 29 states have put forward applications for this. We're not quite all of them approved. And actually, as far as I'm aware, two of those states have already categorically said no. So I think Wyoming and North Dakota have said no. And they went through for a second reading. So if it fails the first time, you'll have a second reading. And I believe North Dakota went for a second reading and failed 52 votes to 35, something like that. So it didn't pass. So that's now put to one side. But there are 27 other states, going through this. I think Utah have definitely had it approved, and they've already now into space. Then I think there's a couple of others there, but I don't know the names of those states. I think stuff came out in the last day or so highlighting. So. Yeah, but this is great. This is at a state level, so this is where they can do with their funds. I mean, we still want it to go at the national level because, Donald Trump wants to create that reserve for the dollar, and he wants to get that through during his tenure, and a lot of people want him to get it done quite early in his tenure, so it's out the way. They don't be waiting 4 years for this. Most people in their own mind would like it done in the first 6 months, but bear in mind, he's been very busy since he came into office. He's done a lot of work there, and every day, there's another big chunk of work being done there, and he's really rolling his sleeves up. And with the likes of Elon Musk and Doge starting to really, move things around in the government there, and they're already starting to make some real changes. So it's all positive stuff. And if he's doing that, and at the same time he signed the order for this process to go forward, so it will go forward. And if you look at the number of states that have done it, that means there's an appetite already at state level for this, and therefore, when senators start going through and reading and looking to vote on this, they'll be supporting what their states are driving as well. So, if we do get the fact that, you might get, 30 more states actually adopting this at state level, then it pretty much has to go to national level because you're going to have the votes already to do that. And we already know that, this is a bipartisan piece of work. It's not like the Democrats are against Bitcoin and Republicans are for Bitcoin. That's not at all. There's 50 million Americans of all parties who own Bitcoin out there, and who knows which party would have the most if they all stacked it into a wallet. Yeah, and I think it's all good and positive. I'm sat in the UK where we're in the Stone Age compared to where the Americans are on this particular work. I mean, you can't even, in some banks won't even let you buy Bitcoin at the moment. So, we're so far behind the curve here, and Europe's probably just as far behind us as well because they've basically refused to adopt the strategic reserve, although the Czech Republic are very keen to. And so, once one country falls away from the European Union on a decision, it does lead to others wanting to follow suit as well. So I expect if the Czech Republic go through with this, we'll see a number of other countries in the European Union follow the same suit there, follow what the US are doing, follow what other countries around the world will start doing as well. I would imagine the likes of the UAE and other states around the world will also jump on this. We've already seen El Salvador take it as their reserve currency, and there'll be a lot of other states and countries around the world doing exactly the same once America join in, because America lead in this type of thing, and a lot of other countries follow.
Most definitely. And I see the European Union almost as what we're seeing at a state level in the United States. As soon as one domino falls, you're right, Anthony, the other ones continue. And a great point you bring up. The entire premise of Bitcoin is to separate state and money. So to think of Bitcoin as one party or one political side of the spectrum really doesn't do justice to the underlying technology that Bitcoin represents. It's funny, you and I were joking before we started how much we've learned about US geography and politics over the year. I was sharing in grade school my final test in my geography class was the teacher pointed at one state, one capital. I got Maine, Augusta, but unfortunately, there's not a lot of Bitcoin mining going on in Maine right now, Anthony. So, with that being said, let's move into Riot. Two components of this news. One was some changes at the board level. The big headline there was the return of Jamie Leverton to the Bitcoin mining space. For those of you who have not been invested for many years in this space, she was the former CEO of Hut 8 before they transitioned to Hut 8 Corp with the US BTC merger in the United States and the relocation. She's a fan favorite in the space. Obviously, a lot of people really a favorite of her HODL strategy, holding one of the biggest stacks of Bitcoin at Hut 8 way back in the day. She's joining the team at Riot along with a few other key members, and they've come out with some additional direction in terms of their HPC AI hunt here. The interesting part for me, Anthony, we heard in Iron's earnings last night, they terminated the agreement with Morgan Stanley. We're going to be asking Dan more about that in today's interview. But it's interesting to see how these Bitcoin mining companies are pairing up with these advisory teams and whether or not that's working out in their favor.
Yeah. Three new directors: Jamie Leverton, Doug Moulton, and Michael Turner are the three directors. Jamie and Doug will be serving as Class 1 directors, and they'll stand for their election at the upcoming annual meeting this year. Additionally, the current directors, Hannah Cho and Hubert Marlowe, will be retiring from the board, and these changes are effective immediately. And so, we know what Jamie brings to the space. She was the CEO of Hut 8 for a considerable time, and as you mentioned, they had the biggest hodl of all the miners at one point with over 9,000 Bitcoin. Now they've got over 10,000, but they had over 9,000 literally 3 years ago. So she was all about hodling Bitcoin. Riot have the third largest hodl of all public companies in America behind Strategy and Mara. And so Jamie, I'm sure, will bring in a wealth of input to the company.
Yeah, I was happy to see that headline, Anthony. You and I actually ran into Jamie in Nashville, and just a great honor to meet someone like her in the space. I recall we asked a question back in the day, at what point would you start selling Bitcoin? And I think her response was around the $500,000 US mark. So we still have not hit that milestone. Now, in addition to the board news there, Anthony, we also got some direction on the HPC AI component. Maybe you can give some color.
Yeah, so Riot have announced that it's engaged with Evercore, who are a premier global independent investment bank, to act as their financial advisor in relation to the company's evaluation of AI and HPC for their power assets at their Corsicana facility. Now, bear in mind, literally 7 months ago, we were sat in Corsicana, and effective at that point in time, Riot weren't even wanting to discuss HPC. So this is great that they've had a turnaround here, realised that the market and how they reflect on the miners that are looking into HPC. And bear in mind, Corsicana is one of the largest sites in the world. It's got a gigawatt of power, of which 400 megawatts is currently utilised mining Bitcoin. And so they've already got a developed site there where they can start building out infrastructure for HPC pretty much straight away. They've literally had a team of hundreds and hundreds of people working on the four big facilities there A1, A2, B1, B2. They've been completed now, fully energized. So they have probably a workforce that could now start to work on the infrastructure required for what I would assume would be looking for a HPC hosting contracts in the same way that Core Scientific have aligned with CoreWeave. And this would be great because this would be 600 megawatts all on one facility. So that would give them probably access close to 500 megawatts of IT compute. So, when you look at these IT infrastructure sites, they need ancillary power to cover all the other extra bits. So you need a significant power to run the GPUs, but you need all the ancillary stuff there in terms of, electricity for lighting, security, et cetera, for cooling systems. And so there'll be a lot of ancillary power. So with 600 megawatts, it would be close to 500 megawatts of IT compute with 100 megawatts supporting that, or slightly more than 100 megawatts supporting that. And then if you put that into context, that would drive, if they manage to get a similar deal to Core Scientific, around about 500 million of net profit per annum. And that could start in very, very short space of time because they don't have to develop the site. They just have to build the facilities. The site's been developed. We met the guy who shifted the 50,000 truckfuls of soil from there. And so the site has been developed ready for this. They were going to put more buildings up for Bitcoin mining. Now they can change the design and start putting facilities up for data centers up for HPC. So everything looks positive for Corsicana. I expected this to happen because it was a case of that when we saw that Core Scientific deal increase and increase and increase, and the numbers that came out, it got all the miners were sort of looking at it and really complimentary towards Adam Sullivan and the team, and they all want a piece of that pie as well now. I mean, there's only CleanSpark who have said. Although they appreciate what Adam's done there and the team at Core Scientific, they're staying with Bitcoin mining, and maybe from their position they'll be picking up additional hash rate as some of these miners don't grow their hash rate and move across to HPC. So it sounds like it could be a win-win all round.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
Yeah, most definitely. Very interesting. I remember our discussion with Zach Bradford in Amsterdam talking about that strategy. And you're exactly right, Anthony. His contrarian outlook is to try and get these assets at a distressed price as everyone else is focused maybe on these strategy shifts or HPC AI exposure. Now, the next piece of news here is Iron earnings. We're not going to go into depth with the earnings itself. Obviously, we have the CEO or co-CEO on in a few hours' time, but we did want to compare these results to the 2 other main companies that have reported, Hive and CleanSpark. Very interesting dynamic as CleanSpark specifically and Iron, 2 of the biggest producers in the world, but polar opposite approach or stance on the HODL front, now being able to compare and contrast these numbers.
Yeah, you're quite right. So Iron have stated all along they sell their Bitcoin pretty much on a daily basis, achieving the obviously the average price each month of their Bitcoin. And they've done that ever since they IPO'd, which is just over 3 years ago. So they've been following that strategy. And in 2022 and 2023, it worked really well because the price of Bitcoin was obviously coming down, and they were benefiting from selling it as at each day. Whereas some miners kept hold of that Bitcoin and then had to sell it when it got literally to rock bottom. And Core Scientific was one of those. Bitfarms, Argo. Some of those miners there had to sell as the price was dropping further and further, and effectively, were losing money on Bitcoin. But that strategy they stayed with, and TeraWulf have followed that strategy as well. So you've got 2 big miners following that, but the rest of the miners, the bigger miners, are all following the HODL. And so we had CleanSpark's results out last week. And, on face value, CleanSpark's result, very impressed. Net income, $246 million, which is amazing because the revenue was only 162 million. But because of the FASB rules, CleanSpark benefited from the roundabout 260.7 million in a revaluation of their Bitcoin holdings over that period. So, Iron can't benefit from FASB rules, so they have to benefit on the fact that, they managed to get cheaper energy and they have the most efficient fleet of all the North American miners. And so revenues for them were 120 million or just under 120 million compared to CleanSpark who had 162. So, about three quarters of the revenue there. Cost of revenues, this is where it gets interesting because cost of revenues, when we're talking about electricity and direct costs, 34.5 million. So they made a gross margin on their revenue of 71.1%. Now, this is revenue from Bitcoin mining and high performance computing. So that's all businesses, 71%. CleanSpark were achieving 56.7%. Then we look at the operating costs. So this is things like your general administration, your payroll, your professional fees, interest costs, anything obviously that is paid from a cash perspective, and we add those up. And if you look at the CleanSpark versus Iron, Iron's was slightly higher than CleanSpark's operating costs. Not significantly. Hive had the cheapest G&A and other costs there. We said that on the podcast the other day when we went through Hive's figures. But Hive had a problem with their energy costs. Their energy costs were so high that they're only able to make a margin just over 20.7%. So, Iron achieving about 3 cents a kilowatt hour, 71%. CleanSpark achieving probably about 4.6 cents a kilowatt hour at 56%. Suggests that Hive's energy was probably around the 7 to 7.5 cents a kilowatt hour, and they were coming out just under 21%. So in terms of net profit, Iron came out with a net profit of 18.9 million, and that was really good, and 9 cents a share, with an adjusted EBITDA of 62.6 million. So adjusted EBITDA takes away things like depreciation, any one-off costs, to see how what the profit will be like, taking away any one-offs and non-cash costs. So that tells you that the company is effectively managing to pay its bills from a cash perspective as well. I mean, I had the net cash flow for Iron down at 57.9 million. So that means after paying all their bills from the 3 months, they had nearly 58 million in cash left over. Now, they do have some of these non-cash costs. So they do have depreciation. It was 36.2 million. And their stock compensation was higher than CleanSpark. It was at 8 million compared to 3. I break that down further into the cost to mine a Bitcoin, and this is where it gets really, really interesting when you do the comparison against three companies. So Iron managed to mine 1,347 Bitcoin in the last 3 months of last year. Their average revenue was just over 84,000, similar to what Hive and CleanSpark were achieving as well. Direct costs per Bitcoin now was 21,455 for Iron, compared to 36,000 for CleanSpark and 65,000 for Hive. So Iron's margin for Bitcoin mining, now remember it was 71% for the whole business, their gross margin for mining was actually 74.5%. And if you look at CleanSpark's margin for mining was 56.7%, and Hive's was 21%. And then you have the operating costs per Bitcoin. So CleanSparks came out at 18,600 per Bitcoin. Hives came out 14,000 per Bitcoin. Irons actually came out cheaper per Bitcoin than CleanSpark. So we look at the cost associated with Bitcoin mine. It was 18,635. So pretty much level with CleanSpark in terms of operating costs per Bitcoin. That gives you an operating margin of 52% for Iron, 34% for CleanSpark, and just 4% for Hive. And if you look at the total cash cost to mine a Bitcoin, I've got Iron at $40,091, CleanSpark at $54,797, and Hive just a smidge under $80,000. So there's a big difference in all those there. Now, bear in mind, we're into a new quarter now where CleanSpark and Iron have improved significantly both their hash rates and their efficiency. So Iron's average hash rate for the last 3 months of last year was 22 exahash. Now, bear in mind, for the whole of January, they had 29 exahash, and that'll increase probably with more machines being energized or less curtailment in February. That could get closer to 31, and then we'll start seeing it ramp up to 50. Same with CleanSpark. CleanSpark had over 40 at the end of the month, but their average would be probably closer to 30 for that 3-month period. So both of those companies are going to be mining more Bitcoin in this quarter than they did in the last quarter, and their fleet efficiency, Iron's at 15 at the moment, CleanSpark's a smidge over 16. That will give them both really low cost to mine a Bitcoin. So I expect these margins to actually improve for both of these companies for the quarter that we're in now, unless energy prices are significantly higher than the last quarter. If they're able to achieve similar energy costs, I think they'll have better margins because they'll have a more efficient fleet mining that over the next period. Final thing is just have a quick look at the balance sheet, and the balance sheet for Iron. In terms of current ratio, they have effectively just about enough cash and current assets in their position to pay off the liabilities. It's 525 million current assets. Current liabilities, I've got 559 million. Now, all their convertible note is held as current liabilities, and what that tells me is that that convertible note is being redeemed in the next 12 months. Now, when you take out convertible notes, and I can't remember off the top of my head what Iron's period was, but I thought it was maybe 4 or 5 year period to do that. So anything over 12 months, that convertible note should be a long-term liability. So it wouldn't be included in current liabilities, but for some reason in their accounts, and maybe Dan can give us some insight into that when we have him on the podcast, but it's shown in current liabilities, which suggests it's going to be converted in the next 12 months, because only things that happen in the next 12 months are in current liabilities. Otherwise, it's a long-term debt. So that's in there. So effectively, they're on a par, literally 94% of current assets to pay liabilities. And with things happening with the Bitcoin they're going to be bringing through over the next 12 months, they'll be able to cover them liabilities off without too much issues. We talked about CleanSpark. They've got 12 times the amount of current asset and liability, so they've got absolutely no problem paying all their debts off the very, very small amount of current liabilities. When we look at the net assets of each of these companies, Iron's has increased to nearly 1.3 billion. CleanSpark at over 2 billion in terms of net assets. Market capitalization, there's about 100 million separating CleanSpark and Iron at the moment. So CleanSpark at 2.9 billion, Iron at 2.8 billion. So literally on a par in terms of market caps. And actually you would think that. I mean, Iron have got slightly less hash rate, but they've got a HPC business and a couple of big sites that we'll talk about later with Dan that are all ready to start looking at designing HPC facilities on those sites. So, we'll get more information on that there. In terms of debt, CleanSpark at 650 million, Iron at just under 400 million. Cash on the balance sheet, Iron have got 427 million, CleanSpark, 276 million. Iron don't have a hodl. CleanSpark have over $1 billion in hodl based on the valuation as of today when these were put together. Enterprise value, CleanSpark coming at 2.3 billion, Iron coming at 2.8 billion. So the enterprise value is literally the market capitalization. Add on to that any debt, take away any cash holdings, which pretty much in Iron's case net each other off, and they've got a very similar enterprise value to their market capitalization. But because in terms of CleanSpark, they have this significant hodl of $1 billion, that brings their enterprise value down to 2.3 billion. A couple of ratios to look at: net asset value. So for every dollar you invest in CleanSpark, Hive, and Iron, what are you getting in return? So you put $1 into CleanSpark, you're getting 68 cents of assets. Into Hive, you're getting over $1 of assets, so $1.02. Into Iron at the moment, you're getting 45 cents. So that tells you that Iron's share price at the moment is at a premium to the assets that it holds on its balance sheet. And that's not unusual. That's not unusual. There are public companies out there like Tesla that would be seriously higher than that as well. So the Iron are building out in the next couple of years a significant amount of HPC, which will have a massive value when you think about the revenues associated with that, and that will change their balance sheet going forward. In terms of debt to equity, CleanSpark and Iron very, very similar amounts of debt to the equity that they have. So both around about 30% of debt on the balance sheet. Hive have about 6% of debt, so they're pretty much effectively debt free with the amount of debt they've got. And the last thing we'll look at is really the enterprise value divided by the hash rate, current and future. So in terms of CleanSpark, with their 40 exahash at the moment, 57.8 million per exahash. Iron with 31 exahash, that's coming out at 90 million per exahash. So it looks like Iron's, cost valuation higher than CleanSpark. But when you look at Hive is 31.3 million per exahash. Then we go to future exahash. We know that CleanSpark wants to get to 50. That takes theirs down to 46.4 million per exahash. Iron going up to 52. That'll bring their cost valuation down from 90 to 54 million. So very much on a par with CleanSpark. Hives, when they get to 25, their valuation per exahash is 7.5. And so that shows you, Hive at the moment, from a valuation perspective, look, pretty undervalued compared to other miners in North America.
Yeah, it's good analysis, Anthony. And as we always say, take these metrics with a grain of salt. The market is by nature forward looking. Obviously, this massive pipeline, the AI HPC opportunity ahead of Iron, is being priced in to some degree. And that's actually what we brought up with these HODL companies, Anthony. We're not seeing any type of premium or forward-looking premium being built into these HODLs like we see with MicroStrategy. So take that for what it is, but obviously a great quarter for Iron. And the number that stuck out for me, that electricity cost per Bitcoin in the $21,000 range, you're exactly right. If they're able to maintain that here for this quarter and throughout 2025, those margins continue to increase. Those are one of the questions we're going to be asking Dan here in a couple hours' time. The other thing you talked about, Anthony, that's interesting to me as a listener of you, we spent so many podcasts talking about fleet efficiency and access to cheap power going into this halving. Now we're starting to see the exact results of all that work over the last year. And you see these drastic differences, not only in the price of power per Bitcoin, but those all-in costs, as you say, ranging from $40,000 to $80,000. And we only have three horses out of the gate here, so to speak, so far. So interesting to see all of that discussion now come into fruition.
Yeah, I mean, I'm going to struggle to see. I'll say now, I don't think any miner will come in with a lower cost to mine Bitcoin than Iron when we get the results. And them results are exceptional. I just want to re-emphasize, if you were forgetting FASB rules, CleanSpark made a net loss and Iron have made a positive net profit. And their positive net profit is all around the fact that they were able to, utilize less energy to mine their Bitcoin than other mining companies. And when you're mining 1,347 Bitcoin, and you're doing it far cheaper than your competitors, every Bitcoin they were saving, tens of thousands of dollars compared to the other miners. So it's a staggering amount. But they have no HODL, so they're not benefiting from the FASB rules that way. And whether the market are taking that into consideration. But when you lift the hood up and look at the results, I was very impressed when I saw them initially, and I got they came out before only literally half an hour before the earnings call. And so I listened to the earnings call with Dan. Very good update from Dan. And we'll hopefully try and ask a few questions maybe that weren't asked last night, because I think a lot of the things that we wanted to ask have effectively been covered in the earnings update. So if you haven't listened to the earnings update from Dan and the team at Iron, it's a really good update. It's about an hour long. There's a lot of questions at the end there. He even goes and asks the retail investors on X to put some questions forward as well, which I thought was really, really good of a CEO, especially during an earnings call. He put a tweet out during an earnings call asking for it. If there's anyone got any questions, I'll try and get enough answers. And he spent about 5 minutes at the end of the call answering about 7 or 8 questions, which I thought was really, really nice to see. Last time I saw that happen was with our Go Blockchain and the CEO there. He used to do this on a regular basis. So, but nice to see from Dan. Nice touch for the retail investors. They have got a nice following now. We were talking before the podcast about how different years you see different changes in miner popularity, and you can see the last couple of years Iron have really made that move and become effectively now probably, along with CleanSpark, probably two of the most popular miners out there, especially in the retail market. I did some surveys over the last 4 years to get my followers to tell me which were their top 3 miners, and the only miner to appear in all those tables in the top 3 for every year was Bitfarms. They still have a great following out there. I know, Ben's, they're having a trying time at the moment. Things haven't gone all their way. But, let's wait. Quarter one, is not far to in the quarter one. Let's see what comes out from this quarter. Maybe they get things moving in the right direction and get some more of them positive results out. But Ben, he was chief mining officer for most of that period. Bitfarms were in that top 3 every year of the 4 years I did the same survey. Initially, it was the likes of Marathon and Riot were in that top 3, and Hive are also mentioned as well in the top. Hut was mentioned in the first year. I think they were in the top 3 in the first year. Hut were a big miner in 2021 when Jamie was as a CEO of that company there, and we've seen that swing now move. 2023, 2024, it's moved now to the likes of CleanSpark and Iron. And I think that race last year to achieve their targets, and both of them did achieve their targets. Not only achieve the targets, they sailed through the targets. Initially Iron had a 20 exahash target and CleanSpark had, a 30 exahash target. And CleanSpark ended up with nearly 40 exahash and Iron was at 31. So it's a good, good indication that they did exactly what they said they would do on the tin. So 2025 could be the same again for these companies. I expect both to achieve the 50 exahash by the middle of the year. Iron looking to achieve 52. So we're going to ask Dan. I mean, it's just a funny number to come out with 52 when you're aiming for 50 by the end of June, and that gives you another 6 months to go 2 more higher. Is it due to a capacity issue? Maybe a rejig of some machines to give them more power. Maybe that's a question we can ask Dan in the podcast today. So, but overall, the results have come out this week. They've all been effectively green. So we've seen positive net incomes. And I did say that the miners will come out with net incomes across the board. So up to now, they're keeping up with what I said they would. And we've got quite a few more results coming out over the next 2 weeks, which we'll cover as well on the podcast as they come out.
Yeah, we certainly will. I always get worried when you bring up Argo, you'll get into the whole Peter Wall discussion there, Anthony, but we avoided it today. Now, we do have some great questions for Dan coming up. Majorly around Horizon 1 and Childress 2. Obviously, those were big announcements. But one question we won't be asking Dan about is whether or not West Texas is suitable for HPC AI or where his favorite food is near the Childress facility. With that being said, Anthony, a great podcast here. Make sure you guys tune in to DR Lewis's Memorial Spaces tomorrow. Tune in here in a few hours' time for our big interview with Daniel Roberts, co-CEO and co-founder of Iron, to follow up on these impressive earning results.